Tax is the most important driver of investment performance, and smart tax strategies can help arrange your financial affairs to actually help you pay less taxes legally and annually. Bill Harris, the former CEO of PayPal and CEO of Intuit, the makers of TurboTax, is here to share tactical tips for maximizing your investment tax savings. Welcome, Bill.
Laura, thank you.
Now, Bill, why should people think about smarter tax planning now?
Well, first of all, let me just say I'm delighted to be back in San Diego because I lived there for many years while I was running TurboTax. Now, in San Diego, you face some of the highest taxes in the country. California's got the top tax rate of 13.3%. You put that together with the federal taxes, and you're paying up to 55% of your earnings in taxes. That's why it's so important.
And why is tax the most important driver of investment performance?
Well, it's a driver because depending on how you set up your investments, you could pay 54% or you could pay nothing.
And what are some of the investing strategies that allow taxpayers to minimize or even totally eliminate what they owe to the IRS on tax day?
Your money in your bank account is about the worst place you can keep it. It has the highest tax rates. So take your cash out of bank accounts and put it into treasury bills or municipal bonds, which are exempt from many forms of tax. That's number one. Number two, make sure you're utilizing your 401k and your IRA. In that way, your gains are not taxed until you retire. And then finally, on your stocks, be very careful when you sell. If you manage that properly, you can offset, defer, or even eliminate all taxes on gains on your stock portfolio. At the end of the day, it's not what you earn that counts, it's what you keep.
And can you tell us about the benefits and the limitations of the IRS's new direct filing pilot? Who is best suited for it?
First of all, it's great that the IRS is spending more money, more time to build technology and people in order to support their customers. What they're doing right now is great for people who have very simple returns. But if you have moderately complex, if you have any investments at all, you need the help of commercial tax preparation software such as TurboTax.
And what may be some of the consequences of Trump-era tax policies sunsetting at the end of next year?
First of all, they might sunset unless there's an act of Congress to extend them. However, if they do sunset, first of all, the top tax rate goes back from 37% to 39%. Second, the standard deduction goes down to where it was before. And third, if you have a very large estate, the estate deduction will go down significantly. So if you do have a large estate, keep an eye on it. And towards the end of 2025, you may want to do your giving then in order to maximize your ability of that deduction.
For more information, visit evergreen.money. And we thank you for joining us on San Diego Living. We'll see you next time.